the volume, this is people that want to buy. If the volume of the buying maybe is 500 units, but the selling volume on the part of the seller, which is the supply, is, let's say, 100,000 units, you can see that the offer is higher than the bid. Here the seller are too many. The moment you notice that the seller are too many, that is for me to tell you that the price of that is going to likely fall. But that is not where I'm going. Look at where I'm going now. If the price crosses the resistance region, and you notice that the buyers are small, the volume of buying is small, there's no need for you to enter or to take position of the stock at that very moment. Concept of bootstrap. There is no way I can explain in details the concept of bootstrap without introducing what we call resistance level and support level using this graph that we have on the board. Now, when you talk about resistance level, just like we know that the price of security or shares or stocks are subject to volatility, no matter how the price of result is rising, it will get to a state the rally will stop, the price begin to fall again. So the level at which the price of security will no longer rise is what we simply call a resistance level. From the graph that we have on the board, 50.50 is the resistance level of these very shares. At 50.50, the price will no longer rise. And that's why we call it price ceiling. At this very stage, the price can no longer rise above the resistance region. In that case, if I am a trader, if I have a stocks, and I notice that the price will no longer cross the resistance region, what I do is to sell. Usually, it's the seller that created a resistance region. It is the volume of buying, of selling rather, that creates what is called a resistance region. It is a region at which the price of security can no longer rise. A price ceiling. What do we call support level? A support level is also a level at which the price of security can no longer fall. On the board, that 35 naira is the price, is the support level. At this very level, it is expected that the price of security will no longer fall because of the buying pressure. So it is the demand here that will not push the price into upward trajectory. That is the concept of the resistance level and support level. So as an investor or a trader, you must understand the two concepts so that you know when to enter and when to exit the market. What then do we now call a bootstrap? A bootstrap is a concept that is used in technical analysis to explain what is called a false signal, or we call it a deceptive pattern that lure the buyer to buy security once it crosses the resistance region with the aim that the price rally will continue. But instead of rally to continue, the price begin to fall. What do I mean? At resistance, one thing about resistance region is this: if the price manage to break out of the resistance region, it is expected that the price of the security will begin to move in an upward trajectory. So in the case of these very stocks, if I'm using this one that we have as a case study now, maybe the price break from, if the price break out of here, maybe to 51 naira, 52 naira. Then, being a trader, I will be willing to enter the market because the price already crossed the resistance region, meaning that the price will continue in an upward trajectory. But at the end now, I enter into the market, but the price now begin to fall the moment I enter. It means what has happened to me is what is called a bootstrap. How does it occur? You see this sign in your charts, and when you see the sign that the price break the resistance region, it is not enough for you to just enter the market because you discover that the price has broke out of resistance region. Because it is our belief that once the price of security crosses the resistance region, the rally has begun. But in this case now, if I see a security from my technical analysis that it has crossed the resistance region, I don't just enter the market. What I do is to look at what we call volume. Now, if you look at in the market, you have what is called bid and you have what is called offer. This is the supply, this is the demand. If you notice that the volume, this is people that want to buy. If the volume of the buying maybe is 500 units, but the selling volume on the part of the seller, which is the supply, is, let's say, 100,000 units. You can see that the offer is higher than the bid. Here the seller are too many. The moment you notice that the seller are too many, That is for me to tell you that the price of that is going to likely fall. But that is not where I'm going. Look at where I'm going now. If the price crosses the resistance region, and you notice that the buyers are small, the volume of buying is small, there's no need for you to enter or to take position of the stock at that very moment, because that is a trap. What they are trying to do for you here is to lure you as a trader or an investor to buy security because the price crosses the resistance region. Once you buy the security, you now notice that the price now begin to fall. Your intention of buying security after crossing the resistance region for the price to continue to rally, that is your belief. But at the end, immediately you enter, because the volume, the buy volume is small, you now enter. And immediately you enter, the price begin to dip. Then that will lead to a loss on your part. Your intention is that the price continue to rise, but now you have entered. As you enter, the price begin to fall because there was not enough volume. So how do you know there is a good trap? It's very easy. If the strength of the buy strength of the trend is weak, there is no need for you to enter. It's a false rally. The rally is not accompanied by a strong strength of the trend, so you don't enter. Yeah, that is why you cannot just look at the fact that the price of security has come resistance region, therefore you enter. You don't do that. I've seen a lot of people that is being trapped presently. You know, and I think last week and last 2 weeks, insurance company actually experienced a lot of stock rally due to the fact that President Ahmed Bola Tinubu recently signed insurance bill into law. So that economic event actually driven the share price into an upward trajectory. People like us that have taken a position when the price was very low, we were able to cash out. But some people now, just because they realize that the price of insurance are rising, especially the insurance sector, all of them enter. Now the price of security are falling. We are not saying insurance stocks are not good, but there is a moment when you're supposed to buy. You don't just enter. Even though you have the money, you can't say because you have money, then you enter market anyhow. If you enter market now, you are going to lose your money. So you must avoid boot trap. How do you know there is a boot trap in the market? When you see that the strength of your rally is weak, especially if your average directional index that is used to measure the strength of the trend is weak, below 25, you don't need to enter. The rally is not accompanied by larger volume. Because, you know, in technical analysis, we have what is called a footprint. I can use how do I explain? Let me use elephant and lion to explain what is called a footprint. If a lion passes through the field, you are going to see the traces of his leg or her leg. The same thing if an elephant passes through the field, you are still going to see the traces. If the traces of a lion passing through the field is faint, if the elephant moves, you see that it will be very deep. This is a larger volume of stocks in the market. This one is a faint. This is a boot trap because the volume is not pronounced. It means there is no institutional investors in the market. Who pushes the price of security upward? Is the institutional investors that pushes the price. The portfolio managers, they are the one that pushes the price of the security into upward trajectory in the market. So if there are not enough buying volume after the security has crossed the resistance region, do not enter. It's a boot trap. And that is what I want to explain for the now. Until we meet again, have a nice day. Thank you.